Welcome, everyone. Today, we're doing a deep dive into something that's constantly bubbling under the surface: geopolitical tensions.
That's right. Specifically, how the Israel-Iran situation sends ripples, really waves, across the global economy.
And hitting something fundamental: oil prices. We've looked through the sources you sent to sort of map out these connections.
And it's crucial to start with the Middle East's role, right? It's
Yeah.
not just a producer. It's really the heart of global oil.
So its stability is directly tied to energy markets.
Absolutely. Any tremor there, it's felt globally. It's not just a regional issue.
Okay, so let's get specific. How does a conflict like this actually, affect crude oil prices so directly? What's the first big thing?
Well, the sources really point to this immediate fear of supply disruption. You feel it in the market almost instantly.
Fear of disruption because Iran's a major player.
Exactly. Iran's a big OPEC member. So conflict could hit their own production, their exports.
Makes sense.
But it's also about their neighbors, other Gulf countries. And critically, the big one is the Strait of Hormuz,
Ah, the choke point.
the ultimate choke point. Think about it. Something like 20% of the world's daily oil supply squeezes through there.
20%. Wow.
Yeah. So any hint of a blockage, an attack, anything, that would slash global supply. And prices, they'd skyrocket.
Okay, so that's the physical supply risk. But you mentioned feeling it instantly. That sounds like more than just tankers stopping.
It definitely is. That brings us to the psychological side, what the sources call market uncertainty and panic buying.
Right. People reacting to the idea of disruption.
Precisely. Investors, traders, they don't wait. They see tension rising and they start buying oil futures.
Futures, betting on higher prices later.
Essentially, yes. They anticipate prices going up, so they buy now. And that demand itself pushes prices up.
Ah, so it happens even before any actual supply is cut off.
Often, yeah. It's this kind of fear premium getting baked into the price. Even rumors, or just saber rattling, can move the market significantly.
So perception becomes reality, in a way.
It really can. It shows how sensitive the market is to just signals.
Interesting. And then there's the more official reaction, right? Like sanctions.
Good point. Sanctions on Iran is another major lever. If conflict escalates, you'd almost certainly see tighter U.S. or EU sanctions.
And that restricts their exports even more.
Yes, it takes Iranian oil off the market or makes it harder to access legally. Buyers then have to scramble for other sources, which are likely more expensive.
Which again tightens the overall global supply.
Exactly, driving prices up for everyone.
Okay, so we've got supply fears, market psychology, sanctions. Let's connect the dots. What does all this actually mean for people listening, for the global economy?
It means higher costs, fundamentally. High oil prices mean pricier gasoline at the pump, obviously.
Yeah, we all feel that.
But it also means higher transport costs for absolutely everything. Goods on shelves, deliveries, it all gets more expensive.
And that feeds into broader economic issues.
Absolutely. It's a major driver of inflation. And higher energy costs can really put the brakes on economic growth.
Especially for some countries more than others.
Definitely. Think about oil importing nations. Countries like India, for instance, they rely heavily on imported oil, so price spikes hit their economy hard. It's like an extra tax.
And we saw this play out recently, didn't we? The sources mentioned that jump in early 2024.
That's a perfect example. Tensions flared, and Brent crude, the global benchmark, went from around $75 a barrel to over $90.
And just days.
In days. It wasn't a slow creep. It was a jump. Shows how fast and how dramatically the market can react.
Okay, so wrapping this part up, what are the key things to remember?
I'd say first, the real risk to the physical flow of oil. Second, the critical importance of that choke point, the Strait of Hormuz.
Got it.
Third, how these price spikes really hurt oil importing countries disproportionately. Right, and finally, just the sheer power of market sentiment, how rumors and threats alone can shift billions of dollars.
It really is this complex web, isn't it? Geopolitics, energy, your own budget, all tangled together.
It absolutely is.
Makes you think about how much relies on stability in just a few key places and the unseen cost of risk that's priced into essential things we use every single